So you want to buy a house, but when you went to the bank and spoke to the person across the counter, or you talked to a mortgage broker, you find out that your credit is not what you thought it was, and you don't qualify.
What?
Well, my advice to you is make sure you rack up your credit cards, never pay a penny down, and go bankrupt. No. That was totally a joke. Don't let your previous credit troubles get in the way of your dream of one day owning a home. In this video, I'm going to go over some ways that you can improve your credit score right after I ask you to click and subscribe to enter our 1,000 subscriber giveaway contest. Remember to hit that notification bell so you don't miss any videos much like this one. And please hit that like button for the YouTube algorithm. My hopes are that with this video, I can help you improve your credit score to a point where one day you can turn that new high credit score into a home that you are proud of and that you can call your own. And in return, I'm asking that you just give a gentle tap to that like button. By hitting the like button or commenting below, it helps spread this video through YouTube like a pandemic. That's right. I'm looking to spread the virus of good credit all the way across the country, and only you can help by hitting that like button or tossing a comment down below. All right. Most people with bad credit don't know what to do about it. And as a result, they kind of end up feeling like this. Well, credit shouldn't really be that scary of a topic, but in order to fix your credit, you're kind of going to have to know the numbers of credit, the credit score you're going to need in order to actually buy a home. So let's go over a few scenarios. If you have, say, more than 20% down, a credit score of just over 600 will actually get you into the conversation of starting to be able to qualify for a mortgage. But realistically, you should probably get up to about 650 or more if you want to stand a chance in realistically getting into the market without using, say, a B lender or getting into some mortgage terms that will really rake you over the coals. If you have an insured mortgage in Canada that's less than 20% down, or under $1 million purchase price, you actually kind of need about a 680 credit score. The CMHC, the national insurer, there's a couple other insurers out there, but they kind of want to see that 680 as being your baseline. So as a whole, if you're under 680, you might actually kind of be in a tough spot. But that being said, if you have a credit score of 620 or above and can make a really good case of why it's low or why it will be getting better, you do stand a pretty good chance of still getting a CMHC insured mortgage. But a good credit score is actually 720 or higher. And if you've actually reached above 800 on your credit score, you're an absolute rock star. So if you do manage to get up to 800, you're doing great. But here's kind of the funny part. Once you hit 720, it doesn't really get better for you. The bank doesn't look at you more favorably. You figure if you showed up to the bank with an 850 credit score that they'd be bending over backwards in order to lend you as much money as they can because you have such amazing credit. That's kind of the way of the past. It's not really what's going on anymore. Anybody 720 or higher pretty much gets treated the same. Now, if you're looking for a rental, however, and you show up with an 800 or an 850 credit score, they shouldn't even be interviewing any other tenants. They should just be handing you the lease. However, if you do have an 800 or an 850 credit score, you're probably a pretty good little saver and you're good at paying back your bills. So you're likely looking to purchase rather than rent. So that's the background. You need at least 600 on your credit score. Ideally, you should be 680, and 720 will really get you into the conversation. But let's say you've gone to the bank and you find out that you don't qualify given your down payment, or you don't qualify at all given your credit. Well, what next? Well, here's 3 steps you can do to improve your credit. And the first one, guys, everybody probably knows this. Don't miss a payment. If you do miss a payment on any of your cell phone bills, credit cards, lines of credit, it's going to ding you and it's going to bring your credit score lower. So you have to at least hit those minimums on every single one of your credits or line of credit or bills or whatever you have. You have to hit that minimum payment and don't miss a single payment. And for sure, don't miss those payments late. If you make a payment, it's going to slowly creep up your credit. But if you miss a payment, your credit's going to go down a lot faster than you can increase it. Tip number 2, don't apply for stupid credit. And I can't be on a soapbox here because I've done it myself. One time, a long time ago, I was at a Canucks games, couple too many pops, and at the MasterCard tent and the kiosk there, they were giving away, I believe it was a Canucks flag or jersey or blanket or something. And Steve, 3 or 4 pops in, thought that this would be an absolutely amazing thing to bring back to my seat and cheer on the Canucks. So the next day I woke up with a flag and a hangover, and a few weeks later a credit card, MasterCard Canucks, it was a cool looking card, showed up in my mailbox, and I never actually activated it. So I thought I had at that point no credit with that card whatsoever. However, another few weeks went by and some magazines and other memorabilia started showing up at my doorstep. And I didn't realize at all that those magazines and other things were part of the promotion that I had signed up for to get what I thought was just a cool flag. And I started getting all this stuff that was charged directly to the card, of which then I never made a payment because I didn't activate the card. Then I started getting calls for those magazines that I didn't even sign up for, that I didn't know I had a subscription to. I started getting collection calls. It was just an absolute disaster. So my advice is, no matter how shiny the object is or how they're trying to give you a credit card, don't ever do it just on a whim. For sure, don't do it after you had a few too many pops in your system. Do not sign up for credit because of the points being transferred to you or anything else. If you're signing up for a credit card or a line of credit or anything else, you should be doing your research on those cards and knowing exactly what you're getting and what you're going to be paying out the other end. So my advice is, no matter how shiny the object is or whatever amount of points they're going to be giving you, don't sign up for credit on a whim. It's absolutely ridiculous. You should do your research and know exactly what you're getting. And for sure, don't sign up for credit when you may not be at your soberest. Okay, here's tip 3, and something that most people don't think about. Let me give you an example. Let's say you have 2 credit cards, both with a $10,000 maximum on them, and then you have a line of credit for $5,000. What a lot of people will do is they'll have that one card with the lowest interest rate racked up all the way to 10 grand. And then your line of credit and possibly your other credit card will be at 0. This is a bad situation. Taking that $10,000 and spreading it across your cards and accounts will actually increase your credit score faster. And the reason is this: credit is looked at much better if you're owing 50% or 60% or 40% as opposed to redlining one of your cards. So your credit score will not go up if I view it like that. It's like a race car. If you're redlining one credit card, it's really going to disrupt your credit and not be looked at favorably. So do this. If you do own credit and it's maxed out in one spot and not in others, even it out across all of those. It will be looked at much more favorably, and it will cause your credit to go up even faster. And last, I'm going to leave you with this: credit is much like your reputation. No, that's not true. It is it's your financial reputation. Building up your reputation can take a long time or even a lifetime, and it can be destroyed in just a few moments. Your credit is exactly the same thing. Your credit takes a long time to increase and can be destroyed very, very quickly with a couple of bad decisions. So take these 3 steps to start building your credit, and hopefully you can convert that into home ownership one day if you haven't already. If you have and you do own, still put these things into place, increase your credit so you can eventually take opportunities to the next level when the time is right. Thanks so much for watching. Please remember to enter our 1,000 subscriber giveaway just by clicking that subscribe button. If you want to see more information like this, please make sure to hit that notification bell. And to help other people improve their credit, make sure you hit that like button and comment below for the YouTube algorithm. Thanks so much for visiting the channel, and we'll see you next time.